Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to the Forex.Today YouTube channel. Thank you for being a subscriber. Thank you for your likes and your comments and all of that jazz. Hi, my name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here. We're going to conduct technical and fundamental analysis. So please get involved and ask questions. What pairs do you want me to cover? I'll start with gold and oil, and I typically do some dollar pairs and some yen pairs, maybe some Swissy pairs. But really, it's your way. If you're benefiting from these webinars, please visit TradersWay.com. Open up an account today. It's your form of paying it back. You can look at these webinars as an investment into you now, so that in the future you will be successful. And so when or if or when that happens, then you should pay it back by opening an account at TradersWay.com. So why don't you start now? Download the demo, go to the back office, download MT4, and then install all my chart templates. The link to the chart templates is in the description below. USD Swiss franc? Yeah, sure, I can see that being good. I forgot to eat breakfast. Breakfast is done. Alrighty. All right, first thing I noticed this morning is gold and oil were neutral, huh? Oh, where's the... I don't have a pen. Gee whiz. Gotta go through all of this. Come on. Who turns the pen off? Who does that? Shades of emptied canvas. Where's the pen, dude? Gee whiz. Takes forever. All right, let's go back. There we go. So I look at this and I say, well, this is top-ish, which we talked about yesterday. And this is bottom-ish. This is sort of the bottom of the range, and this is sort of the top of the range. And so we're essentially in the middle of the range. This used to be resistance, so maybe it's support now? I don't know. But at least recognize you're in the middle of the range and act accordingly. Okay, and then we look at this sucker. This is gold. And so what's going on here? This is the price in which bulls would buy. This is the price that bears would sell. And nobody does anything here. Okay? I suppose someone that is a bull might buy there. Okay? Doesn't mean it's going to happen. It means we're stuck in the middle of the range, is really what it is. But if you're a bull, you could do it, sure. If you're a bear, you'd be a fool to sell. Oops. Shades of empty canvas. Here we got pound dollar falling fast and furiously. Okay, and time to stop. Okay, stop selling. Selling. Stop selling. You know what's on my mind? That's the standard error. Yeah. Yep. All right. So anyway, stop selling. I keep thinking, when I see this small n, I immediately think, that's the size of the sample. That's the sample size. That's the sample size. Ugh. All right, Beast. Hey, by the way, I don't live in the UK and I don't watch UK news, but did Theresa May just making a big announcement that she's not going to run for re-election for Prime Minister? That's funny. Oh, good then. Now we know. Good, we got that taken care of. Why waste everyone's time, right? So, anyways, she's not interested. What can she say? You can beg, but she ain't gonna do it. I think she's gonna have a book, though, huh? What do you think? She gonna step down as prime minister and then write a book about it wasn't her fault? I think she was doomed when she signed up for the gig. I'm like, oh my god, she's doomed. But hey, I suppose if you got a shot to be prime minister, why not? I mean, take any shot you got, right? So. Okay, somebody asked for Swiss franc. There you go. Okay, but we talked about this yesterday, so again, nothing's changed since yesterday. If you're a bull, okay, this is your buying price. If you are a bear, this was your selling price. Hang on. Okay. And now we're in the middle of the month, and we're here. So as a bull, so we talked about this Monday, Tuesday, and probably again on Wednesday. This says stop selling, which gives an opportunity for the bulls to buy. I swear to God, we covered that. Then we're up here and we're like, yeah, so now if you're a bear, this is there, but if you're bull, that is neutral. So I don't know if the market wants to go bullish or bearish, but I can tell you if you're a bull, you should have some caution here. And if you're a bear, you should get ready to sell. Do I have bad sound today, guys? Your practical fairy test, what does that mean? All the fairies I know are very impractical. Thank you guys for driving. I don't know what a practical fairy is. Oh, and twisted thoughts that spin round my head. I'm spinning, oh, I'm spinning. How quick the sun can pop away. And my bitter hands beneath the broken clouds. What was everything? Yeah, so as you know, when you get below this area, I wanted that to be yellow. This whole area is just like danger, that's all. But you stop buying for sure, right? That's the moo trade. Yeah, ferry test for driving. So you mean you drive a ferry? Oh, is a ferry a truck? No, that's a lorry. Yeah, I'm sorry, I'm dense. All right. No, that's going to end today. Today I wrap that up. So after this webinar, I'm going to do the swing trading group. And then once the swing trading group is over, I'm going to study and warm my brain up. And then I'll bang it out. I have 2 hours to do the exam. I could probably do it in an hour is what I'm expecting. But I'll take my time. But I don't think it'll take me close to 2 hours, just from the experience of the class. All right. So this is us talking about in here, possible counter trend trade. And then here we talk about it being dead. And then, of course, we talked about all the other yen pairs look like this through their zone. So out of congruency, you got to have a ton of caution. And this shows an example of why. Lessons learned, like you may not fully appreciate, but you have to imagine that early in my career, I had made mistakes in this zone 1,000 times and was smart enough at some point to realize this is an area I need to pay attention to. Because remember, nobody taught me this. Okay. So I looked and how should I behave in this area, and what have I seen in the past, and how should I behave in the future? And I came up with all these rules of engagement, like if this hits early, there could be a counter trend. I should always take profit in here, all that kind of stuff. But if it blows through, I changed my behavior yet again. So when I hit this, well, we know the where. It is the zone. When you hit the zone, or if you blow through the zone, I have all different behaviors. It took me a long time to figure all that out. Oh, thank you guys. Thank you for the good wishes. I saw all the good wishes that you posted on the video and stuff as well. So I appreciate that, guys. Thank you very much. It's nice to know that you have my back. It's really cool. Okay. Remember doing that? Whoop, whoop! So, anyways, this predicts this. And you notice this line here, let's do it in a slightly different color. You notice the line here? That's another caution to say we're nearing, right? We're nearing the standard deviation. It could even be more than a standard deviation. You guys know your standard deviations? One standard deviation is 68%. Two standard deviations is 95%. Three standard deviations is 99.7. And so what it's calculating is this is the mean, not the median, the mean. And then it's looking at the deviations from the mean and then calculating sort of essentially an average, the average deviation. Another word for average is standard, so this would be a standard deviation. But I think it's more than a standard deviation in the calculation, okay? Because it looks like it's capturing more than 68%, right? It looks closer to 95. So what I'm thinking is these are two standard deviations is the way that it's doing the math. Because it's just a regression, but what is it using for the regression formula? So it looks closer to two standard deviations than one. Okay. Well, I guess we could check that. We could add a Bolly band, which also is done on standard deviations. Where do we have it here? Lines, channels, Bolly band. Where do Bolly bands get put? Bollinger Bands is a trend. How funny. Would never have thought that. All right, so anyways, let's make them fat. Let's make them bright red so we can see them, or dark red, or brown. How about brown? Okay, so now we'll open this up. And deviations 1. Okay, so check this out. I can change it to 2 standard deviations. And boom, and it's about 2 standard deviations, right? We can change it to 3, which would be 99.7. So it's definitely not 3. So the way that this regression tool is doing is it's looking at 2 standard deviations above the mean, and I change my Bollinger Bands, and they're also doing the same thing, right? But it's doing it over a different time frame. So if I matched it, how many candles and stuff, it would be the same. But anyways, so there's your Bollinger Bands, and your right. So anyways, that's what standard deviation looks like. I don't have a thought on that, Oscar. I don't like criminals. Okay, so here's an example of what we were talking about, just to refresh. We were talking about risk when you blow through the pivots. We talked about this, like this is what this does technically, right? But we talked about this situation, you got to be extra cautious. So we talk a lot about double bottoms with a higher high, right? Or double tops with a lower low, right? You know exactly what to do. I tell stories and jokes and lessons, and so you should know that, right? But what we talked about is in this situation, you need to be extra cautious because of like a moo trade type scenario. And sure enough, it hasn't failed yet, but I certainly, in a normal scenario, would not feel comfortable with this. Because remember, my line was here. It's supposed to stay within a 3A2618 typically. So it can still do that, but it makes me uncomfortable. Okay. And typically in this scenario, I'm not really paying attention to like a triple bottom. I'm paying attention to a shoulder, but I don't like it at all. Don't like it. There's a big difference to me between this and this. Big difference. Yeah, like what would I say? Like I like successful, hardworking people, right? So I'm like, hey, how's that business of yours going? Oh man, it's going so great, but I got all these challenges and I'm taking all these risks. And I'm like, oh man, I wish you all the best, man. I hope you crush it. But like talking to a criminal, like, hey, so how'd your day go? Oh man, I jacked some fool. I took his money. Sucker's been working hard day and night, risking his life and limb to support his family, but I jacked him. It was great. What a fool, right? Like, what? I couldn't have a conversation with a criminal. There's like nothing to talk about. Usually it'd be like, wow, that's a series of very bad decisions. Like, are you sure you analyzed the situation correctly? All right, so I just can't imagine what would go down in a conversation like that. Anyways, yeah, whatever. So anyways, caution, 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 right? Caution, caution. So have you guys written down some sort of lesson? We discussed probably all week the meaningfulness of these yen pairs going through the monthly target. Have you written that down? Like that is something you've documented and you know. Thank you, Cash. Appreciate that. But have you guys written it down? You know what it is. You'll know what to do next time. It doesn't happen often, but it probably happens 2 or 3 times a year. You should say, oh, this is a problem for me. And someone else just is trading like it's just like every other day. I covered it Monday, I covered it Tuesday, I covered it Wednesday, I covered it Thursday, now it's Friday. Do you know this now? Is this something that you own? Mentally, spiritually, psychologically? Does anyone have no idea what I'm talking about? Okay. Grinza, yes. Hello? Yep, got it. Getting there. You don't want to go for a sunbed? Pharaoh, you crazy. Tell her fairies don't sunbed. I still don't understand the. Are you're a captain of a ferry? Anyways. Yeah, I suppose it's not just the yens, but you know, I'm a yen trader, but anyways. All right, cool. Along with the picture. Very nice. Taste and breathe. Cool. And twisted thoughts that spin around my head. We did this one, didn't we? Yeah. All right, let's go over to Swiss Sig. How quick the sun can. Oh, 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 oh. Shields up, red alert. Brrr, brrr. How about this one? Oh, oh, oh. Shields up, red alert. Brrr. Right? Can my templates work on MT5? I have no idea. I would assume so, but honestly, I don't know. I don't even understand why there's an MT4 and an MT5. I hope, you know, I've seen them and they look exactly the same. So I think MT5 is just they're trying to sell you signals, isn't it? But I don't want people's signals. It's like just the idea like someone's going to manage your money for you for like $25 a month. It doesn't make any sense. I think I'll take care of my my money myself, right? But anyways. Oh, there's a 10-minute time frame, so it's made for scalpers. See, I was like, how about this scalping? Let's talk about that for a second, because, you know, I'm not really anti-scalping. I like to scalp into my trades. Like, I'm capable of scalping. I traded a whole year on the 1-minute chart, so I'm actually pretty good at it. But just like more food for thought, right? Because we know the way you make lots and lots and lots and lots of money is letting your winners run. And by definition, scalpers don't let their winners run. But they do keep their losers small, so it's sort of the half of the thing. But what if your average winner is 10 pips? What's your stop? Minus 10? Okay. And then what's your spread? Well, if you're trading news and stuff, spread can go up. So let's say your spread normally is 2, but sometimes it's 3 or 4, but normally it's 2. Most of the time it's 2, but sometimes it's a little more because you're a scalper. And at the end of the day, you are now paying your broker 25% of your profits. But you're also losing from time to time 10 pips and paying 2.5 pips to your broker. Your broker always makes money because it's a fee. So now your average loser is 12.5 pips. And you're only trying to get 10. And when you do get 10, you only get 7.5. You see what I mean? So now your average winner is 7.5. Your average loser is 12.5. But you're a good scalper. You make more. You're 60 or 70% profitable. Wins. So at the end of the day, you make zero money. Oh, but you work your butt off. You spend hours and hours and hours in front of the chart, and you always face the risk of one day you go crazy and you lose, and you're totally screwed now, statistically. Now, to get back from your losses, you decide to jack up your leverage, and you go, and you blow up your account, and you're out of business. Oh, is that right? Well, I'll have to create an MT5 version then. I know someday you'll have a beautiful life. I know you'll be the sun. All right. Yeah. So anyways, nice moves. Time to get out. Time to stop. Time to stop. Brr. Time to stop. Stop trading. Take your profit. Okay. That's all it tells me, right? I look at these things. Great. Stop. You're like, Wayne, I can't stop. I'm undisciplined. Oh, okay. So we just did that one. Let's go back and then go into here. Okay. And notice this has gone nowheresville. Yeah, you walk your way in, you scalp your way in, Joshua. But what I mean by that, Joshua, is you're like, okay, so let's say your strategy today, let's make this fatter. Let's say your strategy today is this. You see the market like this. This is your point of view. So now you want to sell, okay? That's your strategy. So now you do that. You're done with the strategy. Now your tactics are to get short in there somewhere. So you can drop into, you can drop into the 5-minute chart now and start to get short. Cool. So there's been a double top, right? That's a reversal pattern, maybe. So now your next trade is going to look like that. And your next trade is going to look like that. And your next trade is going to look like that. And you scalp. But you're in it for the long haul. If you don't make 100 pips on this, you'll be embarrassed. Versus trying to pick up 10 pips. See what I mean? But what I'm doing is I'm dropping into a 1-minute chart or a 5-minute chart. And I'm trading like I'm a scalper, but I actually have a strategy. Okay? Scalpers don't have strategies. They don't have bias. They're just trading price action. Okay? So I would sell here. Okay? And then I could sell here, and I could sell here, and I could add, and then move all my stops and try to let them run. Or I could just sell here and walk away with a stop up here. It's your call. I mean, at that point, it's just tactics. And you and I could have different tactics, but same strategy. And just the difference would be how much money we make. Yeah, 10 pips is embarrassing. So even 15 years ago, I was telling people minimal acceptable performance. MAP. It was like a quota. Okay, your bare minimum profit should be 15 pips. If you're not shocked that you only made 15 pips, then don't take the trade. If you're not like, I am for sure going to make 50 pips on this. If you don't say that, then don't make the trade. And then you move your stop, and you move your stop, and then something happens, and it comes back, knocks you out. You're like, oh, man, that sucks. I only made 15 pips profit. That really sucks. You're like, I can't believe it came back like that. Okay? But you should never try to make 15 pips or less. It's not worth your time. It's not worth the risk. Like, the only time it's worth your time is when you're over leveraged. You're like, Wayne, I'd make 150 bucks on that scalp, and it would take me all day to make 150 bucks if I had a job. Well, you're over leveraged. right? That's like Russian roulette, but you're using a shotgun. You don't even understand the rules of the game, and it's going to end very badly and very quickly. Cover some more dollar pairs. Kiwi! Take a strategic look. I gotta move my stop to break even here. Round my head. So the reason I moved my stop is we're getting closer and closer to this nonsense, right? Can you figure out my trade? This is where I shorted. So like another way I can approach this, guys, let me delete this. Another way I can approach this, where did my stop go? I can move it here, or I can move it to here. So I'll move it to there. And now I am guaranteed 32 pips, 33 pips. That's the worst I could possibly do in this trade. That's how you scalp, son. Okay. So if I was sitting here on a 5-minute chart, let me do it this way. If I was sitting here on a 5-minute chart and I scalped it, okay, I could take 50 pips profit right now. Right. I do. In fact, after this webinar, the swing trading group and I are going into a private room, and we are going to plan all of next week's trades. I haven't faced gap risk cash in so long. I can't even remember the last time I saw a gap that I cared about. There was a gap, what, 2 weeks ago or something? It was bigger than usual, but that used to, you know, like, so when you read about gap risk in a book from an old man like me, gaps were like 300 or 400 pips. So now like a 30 pip gap, I don't care about that. That's not risk. Why would I be in a trade with less than 30 pips or only 30 pips? That I should be rolling into the weekend with, you know, 150 pips, 200 pips. I mean, it's just a blip in the moment of time, right? So to me, I don't face that type of risk. Now, of course, in saying that, one day soon, you know, there's going to be a 300 pip gap. But I haven't seen a gap like that in a long time. And in fact, it's gotten to a point where I'm trading Thursday and Friday trades way more than, well, look, 15 years ago, you couldn't really roll into a weekend the way I roll into a weekend now. You just couldn't possibly do it because of 300 or 400 pip gaps. So imagine like non-farm payrolls used to be 300 pips, 400 pips down, 300 pips up, 400 pips down in the matter of 20 minutes. Now non-farm payrolls is like it moves 30 pips and stops. So like gap risk is very similar to me now. I come from this wild, crazy world, and now it's like tame. It's like being afraid of kittens. Okay. Oh, Jason, it is open to the public. You just have to pay money. But cool, it's only money. Cool thing about money is not only can you just make money, but then once you have enough money, money makes more money. It multiplies like rabbits. So pretty soon you're like, what do I do with all this money? And you're like, yeah, well, you just save it. There's nothing to buy. You already own everything. So you're like, well, I guess I'll just save it. And then you come back in a year and, oh, dang it, now you got even more money. Because when you save it or invest it, it just keeps making more money. You're like, son of a gun, what do I do with all this money? Okay? So, like, money it's only money. You just add some money, and now you either get knowledge or you get freedom or your problem goes away. Cash says you have no control over the weekend. Absolutely correct. But what I'm saying is, when was the last time the market did this? Where we gapped hundreds and hundreds of pips. I don't even remember it. So that used to happen a lot. Like a gap used to almost always be like 50 to 75 pips. And then a big gap would be 150 pips to 200 pips. But now a gap is 12 pips, and sometimes it's 28 pips. So it is there. And of course, the risk is always there that, Iran fires a missile on Saturday morning somewhere in the vicinity of an American warship. Yeah, then that could gap you. But what is the relative risk of that? You'd have to do the calculation. It can happen, and it has happened in the past. It just hasn't happened in years and years and years and years and years. So what kind of risk do you truly face? And of course, that also only really matters when you're over leveraged. So for example, if it gaps and you lose 100 pips, all right, that really sucks. It'll take you a whole 3 days to make that back. And at the end of the week, you'll say, oh, it was a very lame week because of that weird gap, and I got a slap in the face, but the end of the week, let's say break even. You shouldn't be in a situation, and you're saying the same thing, but whatever it is you're doing, you should never put yourself in a situation where you'll lose a significant amount of money. And so you might be saying that, like, don't trade it because you might face a gap. And I'm saying, well, if a gap, let's say the worst gap we've seen in 5 years is 100 pips, you should be able to lose 100 pips and it's nothing. You're like, wow, that really sucks. That makes me so mad. That'll take me like all day to make back. Right? Yeah, flash crash has become more realistic of a risk where, like the January yen strength, I prepared everybody for it months and months and months in advance. And I said, the first week of December, you should be net short yen pairs. You should be buying Japanese yen. Even though we've been selling Japanese yen for so long, suddenly you need to be buying Japanese yen, but not until the first of the year. And then the first of the year comes and boom, they all move like hundreds of pips. I'm like, oh my God, I knew it was going to get strong, but I didn't know that, right? So cash is still a big unknown, I guess, but I'm not worried about it that way. I used to be, so I guess that's all. To each his own. It's almost like it's not as relative as a risk, right? So, like we were talking about before, your risk curve looks like this, and I think I'm more neutral than you. So I see it, and I'm not worried about it, but you might be leveraged a lot more than me, right? So like I have a starting rule of thumb. For every $100,000 in cash, I trade one mini lot. That's the starting point. And then over time, I lower my risk. But you might trade one mini lot for every $1,000 in your account. And I'm saying for every 100,000. So you're 100 times more leveraged, which means a gap of 50 pips for you is worth 500 to me. And like I don't, so it's bad for you and it's not bad for me. So I don't know, and I'm not saying that's true. I'm just saying that would affect all this analysis, right? So again, it's just math, and that's the interesting thing about anything, about trading, about insurance or whatnot, right? So if let's say this is a typical chart. Oops, I didn't want to do that yet, but that's good. I want to do that in a second. Okay, let's say this is your risk profile, and let's do, you have a scenario where, should I do this? This is too thick now. Let's do a scenario here where you either make $100,000. What? You either make $100,000 or zero. So what will you probably make? Even though it's an or question, you'll either make 100,000 or you will make nothing. Right? How do you, what does the math say? Well, you take the probability, right? So we know this is 50-50, right? So you go 0.5 times 100 plus 0.5 times 0. So the value of this is actually 50, right? 50. If this was 100. Okay. Now where you end up being here, and then where you end up being here, and the certainty equivalent of this, and all this is the amount of insurance you'd buy. But you're on a different curve than I am. So I might be here, and you might be here. Okay. Or, and this is what we were talking about last week a bit, if your curve is this way, then go back to this, then you would be here. I didn't draw a good curve, but you know, your certainty equivalent would be higher, not lower. I don't know. I'm not explaining it well. All right. You want my view on Aussie, just in general? Well, my view is not important. You should go to the Reserve Bank of Australia and ask what the RBA thinks of the Aussie dollar. Okay? That's what I want you to do. Now, technical analysis I'm trying to teach you how to do. And this suggests S2. We knew that yesterday, the day before, 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 right? We knew this 17 days ago. All right, so where are we in that move? And we're right there. So using technical analysis, it's not my opinion on the Aussie dollar, but based on technical analysis, today's probably the last day you're going to trade this short. Okay. But you know, if you're a bear, it's super easy, right? up, sell, sell, sell. And this one's out of whack because of the monthly and the weekly, so that makes sense. But you could suppose try in here. And now you should be thinking about getting out, not in. Okay. Another way of looking at that would be like that maybe. Okay. So I have to click in, even though I'm a 4 hour. Okay. So I'll do this in black. This is the, well, let's go fatter. Let's do it quickly here. I'll do it this way. This is the sell zone, that's the sell zone, that's the sell zone, that's the sell zone. Well, that's the sell zone, that's the sell zone. So that's, some of these are not good. That's the sell zone, that's the sell zone, that's the sell zone, that's the sell zone, sell zone, sell zone, sell zone. So not many of these were that good. Let's do this way. Let me thin this out a little bit. So this was a good trade. This was a good trade. No, that was a good trade. No, no, no. That was a good trade. No, no, no. But this was, yeah. This was a good trade. No. So you got 1, 2, 3, 4, 5, 6, 7 winning trades if you were a bear. If you're if you're a bear, these other things were just no setup. There's just no setup. You wouldn't have had a trade. So, you know, there's nothing here. You might have got short in here. That's why I kind of hesitated. There's no trade here. Did I miss one? Yeah, there's no trade here. So yeah, so 7 out of 10 trades, and there was no trade today. So 7 out of 11 trades, you got an easy setup and made money, and now you should stop trading. Okay. I think we covered everything. Is there anything I missed? Wanted to show you something, and I don't know where it is. It just popped into my mind. I need some pictures, but honestly, I don't know. Maybe it's in downloads by accident. I don't know. Anyways, I think we've covered everything. USD CAD, didn't I do USD CAD? I thought I did USD CAD. Euro Kiwi? I don't want to do Euro Kiwi. Euro Aussie. All right, you guys want to do Euro. All right, I'll do a couple more Euro. Okay. Okay. So you should know the target. Okay. So the target's right here. Doesn't look like we'll hit it this week. So really I'd start being cautious about next week. Seems to be slowing down. But right now you're riding the 21. I mean, again, if you did your job on Sunday, you're in the trade. You're not very happy with it. You're not making much money, but it's doing its thing, and you're just slowly creeping up, and you're getting close to the sell zone. It's a very mediocre trade. but it's chugging along. Oh, I did not? Okay. I'll do it. Euro Kiwi. What was the other one? Euro Aussie. Should be like the same thing, but I don't have Euro Aussie set up here. Why don't we just do Euro CAD? I mean, nothing to do, right? So I guess I'll change this. Euro Aussie. Euro Aussie. Okay. So it looks just like the Kiwi. And it's a mood trade. You're at the end of the week. You should be done. You should be out. You should be walking away. Clear. Okay. So you should be done for the week. You're supposed to be done for the month. Yeah. I don't know what to say. You shouldn't be in it. Like, why are we covering it? Is my thought. Like, why are you asking me to do this? You should be out. It's very, 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 very clear you should be out. But my concern is that you should have been out yesterday. It's not the right time of the month for that. I'll do it later. I'll do it in 2 weeks well, not 2 weeks. I'll do it in a week and a half. So you should have been out of this yesterday and done. And then you're saying, well, Wayne, what if I'm a bear? Well, you can't be a bear, right? You can't be a bear in this scenario. You're not, it's impossible. So you either buy it or you don't buy it, but you can't buy it now, so maybe you buy it on Sunday is really the only choice. But you should be taking profit, and you should have taken profit yesterday. So I'm a little concerned you asked about it, to be honest. Like, you wouldn't be asking me about it if you were not in it. You wouldn't be asking me about it if you, I don't know. So, yeah, maybe you buy it next week. You need a reverse, but that sets up a problem too. Yeah, that shouldn't be one you're asking about. Yeah. Or, I guess the other way I should say it is like, I don't understand why you want me to look at that and talk about it. So there's something wrong. I think you need to go through all the courses at FX Bootcamp. I know it sounds like a sales pitch, but I don't know any other way of saying it, because this is really an odd one for me. You should have been out here if you were patient and disciplined and conservative, but you're not. So now you're riding it up here, which gives me caution in of itself, but then you should have been out yesterday, but you didn't get out yesterday, so you're probably here. So my concern now is you're still in it, even though you're not supposed to be, or God forbid you're trying to short it. And I'm like, that's a problem. Like, these are real problems. It's a red flag. So I'm not trying to belittle you or something, but there's some big red flags here. I don't know what's going on. It's a bit of a mess. Well, there's letting your winners run, but then there's like not managing your trades. Those are two different things. So on the first day of the month, the front run. So if you were in the swing trading group and we were covering this, which I didn't, but and you were a bull, which you could have been, that's very clear. This is a buy. This is a very, very obvious buy, and you would have put your limit right here, and you would have gotten out a week ago. You wouldn't have been in this all week. You shouldn't be assuming a mood trade. That's a terrible assumption. So most likely you got lucky because you didn't manage your risk. Well, if you're not managing your risk, you're more likely to get unlucky than lucky, and you got some major problems. Or you didn't see any of this, which means you don't know how to swing trade. You're not using pivots. You're not using proper rules of engagement. So then that brings me some caution. The price action of it, I suppose, is okay. But even then, golly, Yeah, yeah. Yeah, again, I I trade probably differently than what you might be used to. I only see probabilities. I don't see like luck. I'm not a luck trader. I'm not a gambler trader. So like the for sure money, if you made a trade, was this. Okay? That's the stuff you bank. And you do that all year, over and over and over again. So you should be out. But then it goes a little higher and you say, oh, look at that. I wonder if I can get a mood trade. And you buy it there and you let that run, right? But on a monthly basis, you're supposed to be out. So you're basically deleting your monthly pivots and you're only using weekly. But you know it's a high it's a low probability scenario anyway, so you should be risk averse. But then using your monthly trade planning skills, you know you're supposed to get out here too. But you're not using those skills, nor are you using these skills. So then it grows. Then I really get cautious or concerned because then I'm like, well, what is it that you're doing? If you're ignoring this and you're ignoring this, I literally can't figure out how you're trading. You're like, well, I'm using price action only. Okay, I can see that. You're a pure price action trader. Which means, I guess, the way you're doing this is you're just dragging your stop, dragging your stop, dragging your stop, dragging your stop, dragging your stop. Okay. Okay. All right. Okay. I wouldn't do it that way if I were me, because you're not going to be consistent. And also, the law of averages say if there's a high probability that there's going to be some sort of pullback here, let's say there's a high probability of this, even if it continues up. This is not a carry trade, so you're not carry trading it. So I would ask, how do you manage this? How do you plan on managing the risk? So you can see the price action here. It's very straightforward, very easy stuff. How much are you risking here? Can't see that. What is that? 160, 120, and we're up here. I can't even see it. Let's do it this way. So you have a high probability. I mean, that's 100 pips, bro. So you're trailing your stops by 100 pips. I would say, like, you could just take your profit and buy it back later and put the 100 pips in your bank, right? Oh, right on, Yoda. Okay. Okay, Jorge. So it brings up a lot of questions for me about your trading. And it's not necessarily bad. It's more like your process. I'm not sure what your process is. And that makes me concerned that you don't know what your process is. Oh, 1,000-to-1 leverage, huh? Well, I hope you don't have $1 billion. Now, why would you need 1,000-to-1, Yoda? If I teach you every day, well, I guess you're new. I teach you how to be conservative and disciplined. So, you're already ignoring me, but I guess you haven't heard that yet. Well, Yoda probably doesn't have any money. So what are you going to do? I mean, that, right? Like, it's nobody's fault. You don't have money, so you have to make money. But I wouldn't go. See, I wouldn't trade to make money until I had money and experience. Jimbo, they wouldn't unless it was like a micro account or a mini account, right? And they'd probably B-book. Well, I say probably. They would B-book anything like that. So, right, Jimbo? So, Jimbo, look at it from a broker's point of view. You look at all your traders, and people with small account sizes and 1,001 leverage have a 99.9% chance of losing their money. You're like, okay. Like, that's not what Traders Way wants. That's why I do these webinars. But, you know, so I don't know. I'd be very concerned, right? Right? I'd be just super concerned about the 1,001. If someone just told me people with 1,001 leverage have a 99.9% chance of losing money or all their money, I would say, well, then I shouldn't do that. But I think I know what Yoda's saying. I will typically, let's say, an offshore account can have 100 to even 200 to 1 leverage, right? So let's say I go with 100 to 1. United States is 50, in Europe it's 40, so 100 is more than enough. But I don't actually use it. I could, I mean, because I adjust my lot size, so I could leverage up, but I don't leverage up. I build, but for some reason, that's what I choose. But an onshore account, 50 to 1 is enough. It's enough. Not a problem, right? 50 to 1 is more than enough. So it just comes down to each his own, right? Well, the whole thing about Jimbo says, why not just milk commissions, and right? Yeah, well, and that's what Traders Way is trying to do, and that's why I'm here. Not milk commissions, as you say, but it's more profitable. Let's say it this way, Jimbo, right? It's more profitable to have someone trade not for a few months and disappear, but for years and years and years and years. And as they trade, because they're profitable, their account size grows, so proportionately their lot size grows. So if they trade for years and years and years and years, it's a very good business to be in. I mean, it's a good business. It's not raping and pillaging. It's, they make, every time you place a trade, they make some money. Cool. So they want you to trade forever, and they want you to be able to grow your account size. And the only way to do that is to trade profitably. But the vast majority of retail traders don't trade profitably. So they're like, hey, Wayne, can you help our clients? And I'm like, I like the way you think. Okay. Oh, Forex trading strategies made $2,600 today. Great, which means you don't have much money. Thank you for sharing that. All right, so anyways, you know what? Let's go. Let's go. I feel like I'm getting bitchy too, right? So I need to go before I start insulting everybody. I get bitchy. I got a big day today. When I sleep, I work and I calculate and stuff, so I get bitchy because I don't get REM sleep. I can't turn my brain off. Right? Do I have ownership of Traders Way? No. I'm just a humble currency trader. So I got a big day today, and I got to meet with the swing trading group in 15 minutes. So 15 minutes, guys, swing traders, I'll be over there. And then I got to study and I got to do my exam and wrap up my first degree. And I'm half done my second degree already. So in a matter of hours, I will officially be an expert in macroeconomics, in case you didn't know. So I got my Harvard Crimson on. So it'll be nice to have that on the LinkedIn profile. Yeah. No. Well, Master Yoda, I wasn't being mean to you. I'm saying you probably don't need 1,000-to-1 leverage, is what I'm saying. Okay, so I didn't mean it that way, and that's why I guess I'm cutting myself off. I sound really bitchy and mean, but I don't mean it that way. Okay, Master Yoda. All I'm saying is I want you to succeed, and the vast majority, if not everybody, with 1,000-to-1 leverage loses. So I don't want you to lose. So I'm just concerned, right? Yeah, and that's all. So it's more love than hate, okay? I want you to succeed. I don't want your account to blow up. Even just as, let's say, a representative of Trader's Way, I want you to trade profitably for years and years and years and years and years and years. Okay? Okay? Cool. Yeah, that's cool. I'm good with that. So, everybody happy? Are we in a better mood? I apologize. I'm going to give you a big hug. I apologize. I got a lot going on mentally. So, I'll be in a different world in a matter of just a few hours. So, I will talk to the swing traders over the swing trading group. Holt! Halt! Thanks for subbing, Holt. Okay. So peace on earth. May the pips be with you. May your profits be above average. And please subscribe to Forex.Today and watch all the videos. Like I said, I think there's 4,000 videos. And thank you for the comments and the likes. That's really cool. Cool. So I'll see you guys Monday. Have a wonderful weekend. Cheers.